All right, guys, welcome to the Buff Show. Today we have a market update coming your way. We are covering November's numbers, and today is December 18th. So we'll be releasing this end of December, and these are your latest real estate numbers. So we're going to do kind of the monthly indicators for the state, and then we're going to dive into kind of northern Utah counties. We're going to cover Weber, Davis, Morgan, and then Ogden Valley. So we'll kind of blow through those ones pretty quick, but those are kind of, each market's different. And so while we're covering these, they change, but the monthly indicators is a really good general idea as to what's happening across the state.
As a whole, yep.
Yeah. So got Cade Kerrigan here with me, and should be a good episode. So let's jump into it. Cade, do you want to tell us where interest rates are roughly right now?
Yeah, so right now, the national average is roughly a 6.8 to a 7 at the moment. Now, with that being said, a lot of lenders can kind of mess around with things to get you a little bit lower, but that's a good, if you're running numbers on your own and you're trying to kind of figure out what pricing might be for you with a certain purchase price, run with those numbers.
Yeah, always shoot higher.
Yep,
I just
absolutely.
bought a house a month ago. I was 7.1. They've dropped a little bit since then. So
yeah, rates are they fluctuate a bunch because I remember we bought a home in October. We closed in October and we got a 6.125
Jeez.
rate. And then there was actually
Did you have a buy down on that though?
Nope.
No?
Nope. So, and then there was a couple, two houses down from us that purchased, and they closed, I believe, like a month and a half after us. And they were looking at about 6.75.
Wow.
6.5 plus.
Yeah.
I know they were kind of like panicking a little bit because of how much it went up.
Yeah.
So anyways, rates are very volatile a little bit. And so just stay in close contact with either an agent or a lender.
Yeah. And then daily snapshot for the market in Utah. So we have December 18th, 2023, there was 83 homes on the market. December 18th, 2024, 9,700 homes on the market. So we're up 18% almost. That's just something I like to pull those numbers, just a snapshot. So we're going to jump into these monthly indicators. Okay, do you want to lead us off maybe on new listings?
Yeah. So what we're going to look at here, we're going to compare November of 2023 to November of this year and just kind of look at the difference of it. So November of 2023, there were new listings, 3,300 new listings. This year in November, there were 3,500 new listings. So that's a positive 6.2% increase of listings. So ultimately, that's a good thing. We need more inventory.
Yeah. And that's like, if you look at the graph, we're looking at like Utah's so seasonal because of the holidays and winter. Mm-hmm. Like it spikes in like a ton in the spring and summer months, and then drops off in the fall, winter months.
Absolutely.
So just keep in mind those trends. So we're going to see a pretty big spike. We're at the bottom of that, but we're higher than we were in 2023 and 2022. 2022 was kind of the lull of new listings. That's when rates shot up and everybody was freaking out, not knowing what to do. So pending sales, a count of the properties on which offers have been accepted in a given month, we are up 4.6% from last year. So overall, increasing there.
So closed sales, a count of the actual sales that closed in a given month. So these are properties that have actually closed. We're up 13.2% from 2,700 to just over 3,000. Again, more properties are moving. Properties are continuing to move. Rates, even with rates being up a little bit, they're still moving a little bit.
I mean, the market's been upticking since 2 years ago.
Yeah.
Like if you wanted to time the market, the timing of the market was 2 years ago, and we've been climbing out of this, I guess, recession or hole that you could say we went into. We've been slowly climbing out. So
one thing maybe a little opinion of mine, I guess. But you're looking at this graph here. You look at 2024, 2023, and obviously you kind of take out 2020 and 2021 maybe, but you can look, we're still underneath all the way back into, as far as number of units sold, back to 2015, 2016, give or take. So I know you hear it all the time. I see it on my social media all the time. Like recessions coming as far as real estate, the bubble's gonna burst. And I just don't think we're quite there yet. I think there's a lot of pent up demand, and we're still working on inventory going up. So
Right. Yeah, this next spring will be an interesting one.
Yeah.
So days on market until sale. So the average number of days between when a property is listed and when an offer is accepted in a given month. So keep in mind, this is not from like the day you list to the day you close. It's from the day you list from the day when the offer is accepted. So currently we are up 17% from that of last year. So we're up 62 days on market, which the prior year was 53. And people all the time, they're like, Payton, it's a great buyer's market right now. And it's funny because I'm like, well, like if you compare it to 2021 and 2022, when we were like 20 days on market on average, like we're 3 times that now, but we're a far cry from where we were in 2007, 8, all the way through 2013, where homes were on the market an average of like 120 days.
Mm-hmm.
So we're still half of what we were like in the Great Recession.
Right.
And 62 days on market is not bad.
No, I feel like that's pretty common. Like we're kind of seeing that 60-day market often. Like that's kind of becoming almost the new norm since 2020.
Which I think, and on our listings, I think we averaged them out a while ago, and I can't remember the exact number, but we were around 30 to 40 days on market. So we're on homes that we list, we're significantly under that as well, as far as getting people an offer and getting it accepted. So
yeah, I think one understanding you need to have with your agent is just your area too, because every area is going to be different. There's going to be areas that, the average days on market is 100+ days.
Yeah.
Just depends on where it's at. So that's something you need to have that conversation with your agent. Okay, so median sales price, point at which half of the sales sold for more and half sold for less, not accounting for seller concessions in a given month. So this year we're up 2.2% from 489,000 to 500,000. So basically it's kind of taken into account the median sales price of a house. It's a little bit different than the average, but you're sitting right about 500,000. Which it's just continuing to trend up.
Yeah. I love comparing median and average. It's crazy how different they are. So median is like you have all the sales lined out and you just figure out which one's the middle one is.
Right.
And then average is where you add them all up and divide it by the number of inputs that there were. Average is a lot higher. And median sales price, like the highest median sales price that we've had was in 2022. And I want to say it was below 550. It was probably like between 530 and 550, 540-ish. So we're not too far off of like the height of where, the median sales price was. And then the next slide we're going to look at is the average sales price. Mm-hmm. We are down 0.1% from that of last year. We're at 641,387. Last year was 642. But it's interesting. Our average sales price is actually higher than we were in 2022.
Yeah.
Which is interesting. They contradict each other a little bit, but I would say the market has almost, I would say we're very close to having rebounded to where we were in the peak of 2022. It seems like on prices.
Yeah, I agree. All right, so the percent of original list price received. So this is the percentage found when dividing a property's sales price by its original list price, then taking the average for all properties sold in a given month, not accounting for seller concessions. So this is basically taking, I list the home for 500,000, I ended up selling it for 495,000. You find the percent difference there and then average them all out within the month. So last year we were at 95.8%. This year we're up 0.4% to 96.2%. So that just basically is stating that people are getting a little bit more out of their home as compared to what they're listing at to what the home is actually selling for. So they're selling for 96.2% of the original list price.
Yeah.
So,
and that doesn't include concessions, which we see, like if we were to add those in there, I'll bet it would be closer to like 90,
probably close to
94%, maybe 3%. I don't know. Mm-hmm. Yeah, it's because I've seen sellers pay $20,000 and closing costs. You know,
Yeah.
it's typical that there's some closing costs included. So what sellers are netting is slightly less than that, I would say.
Absolutely.
And it's interesting going back to 2021, 2022, where we were over 100% of original list price received. So,
Mhm.
so housing affordability index, this basically takes the median household income and then the median priced home under prevailing interest rates, and tells us how affordable homes are here in Utah. The higher the number means greater affordability. And we are down about as low as we've been. We're slightly above the lowest point, but we're up 2.7% from that of November of last year. So things are slightly more affordable, I guess you could say, but still, you know, at kind of record affordability. So
I do feel like, I mean, you can look here on these numbers here as far as the months as they go. You can look, and as you start hitting those winter months, you start getting more affordable. And I think that's, in my opinion, at least that's a slower market. You start shifting into a little bit more of a buyer's market. There's less properties moving. And you start seeing those, days on market go up a little bit. The market slows down, and so the homes can become more affordable, in my opinion, because you can get more of a
I agree with that.
negotiate quite a bit more on them.
I think one of the best times to buy is in the winter time.
Yeah, absolutely. Moving sucks, but we'll talk about that later.
Yeah.
All right. Inventory of homes for sale, the number of properties available for sale in active status at the end of a given month. So it's pretty self-explanatory, just the homes that are still listed as active at the end of the month. So 2023, we were at 11,406. 2024, we're at 12,478. That's a 9.4% increase. So there are more homes on the market, and which probably has a little bit to do with this, but there's more homes sitting on the market just a little bit longer, I would say.
Yeah.
So,
it's a good issue. Good.
Yeah.
I mean, we need the inventory, so it's good.
Yeah.
Still down significantly from like 2010-ish when there was 25,000 homes on the market, but we're up quite a bit from when there was below 5,000 homes on the market. So back in 2022. So good spot to be in. On supply of inventory, this basically says the inventory of homes for sale at the end of any given month divided by the average monthly pending sales from the last 12 months. So basically, how many months would it take for you to run out of inventory with the current inventory that we have? We're at 3.6 months. So it stayed the same with November of last year. And people say like a buyer's market is if there's over 6 months supply of inventory, a seller's market if there's under 6 months supply of inventory. So I would venture to say that we're still in a pretty strong seller's market at 3.6 months supply of inventory across the state. So those are the monthly indicators for the state. We're going to kind of jump into some of these more local market updates. So Weber County, just looking at November, so we had negative 4.9% new listings, 3.8% more pending sales, 33% more closed sales, that's interesting. Median sales price went up 6.8%. Average sales price went up 14.2%. List price stayed about the same. Days on market went up 26% to 62 days on market. 8% more homes for sale in the inventory, and then 3.4 months supply of inventory. So pretty strong numbers for Weber County. Yeah, values are going up quite a bit compared to that of last year.
All right, looking here at Davis County, new listings were down 7.8% from 282 to 260. For pending sales, we're down 20% from 237 to 188. For closed sales, we're up 21.2% from 222 to 269. So a similar interesting thing there as we had in Weber County. Yeah. Median sales price, we're up 7.4% from 499,000 to 537. Average sales price, we're up 6.4% from 560 to 596. Percent of original list price received, we're up 0.5%. Days on market until sell, we're up 4.2% from 48 to 50. Inventory of homes for sale, we're up 1% from 747 to 755. And months supply of inventory, we're up 4% from 2.5 to 2.6.
So Davis County is a little bit more expensive of a market, and it's a little bit hotter there. Homes are sitting on the market less. They're costing a little bit more, a little bit less inventory is what I got from that.
Absolutely.
Comparing to Weber
Weber.
County. Morgan County. So we got new listings. So Morgan County is it's a very small
Odd.
county.
Yeah.
And I don't think we need to run through all these numbers really, because depending on what month you look at this, it skews a lot. So there was only 5 new listings in 2024 compared to 17 in 2023. So it's a 70% chance or 70% change in months there, which is crazy. Overall, I think Morgan is pretty stagnant. Like median and average sales price are right about the same. It's definitely more of a more expensive market. Days on market right around 50, 3.4 months supply of inventory. So there's just not a lot of data points for us to have really great numbers here to look at.
Yeah, there's not a lot of movement in Morgan. Morgan, it's a small county, and there's not a lot going on there, honestly, most of the time.
So Ogden Valley, I'll cover this real fast because I pulled this chart. So this is one that I just pulled the monthly indicators basically for Eden, Huntsville, and Liberty. Total volume sold in 2024, 22 million. So that's up quite a bit from the 10 million in 2023. Average sold price 1.3, up quite a bit from 878. But again, these are smaller,
more localized numbers.
Yeah, I mean, there's just not a lot of data points here, so this will vary a lot. But overall, I'm kind of seeing similar trends as we go back every month. I do this report every month. So percentage of list price received, 87% in 2024, 88% in 2023. Number of homes sold in November of 2024, 17 compared to 12 in 2023. And then days on market, 106 compared to 54. So days on market shot up quite a bit. It's kind of crazy to think that
double in volume, but is that?
Well, I mean, it just could be a few higher end homes sold.
For sure. Prices
definitely are going up, but their sellers are still negotiating quite a bit, like 87%. And it's always kind of around that 90% mark as I go back and pull these numbers. I think the Valley is definitely a second home. Like it's more of a luxury item. Like, so as the market tightens up and interest rates go up, like people don't care as much about the second homes, or like they're less of a priority, you know? And so I think that's why we're seeing some of these numbers suffer maybe a little bit more. But overall, it's still holding pretty strong overall. And there's a lot of changes happening in Ogden Valley that I think will be interesting to watch unfold. So anyways, that's a quick snapshot as to where the Utah market's at and where things are at. Hopefully it helps you guys as we head into next year. So this will be our last market update for the year. You guys found it insightful, and hope you guys have a Merry Christmas and a Happy New Year. Thanks, guys.